You are watching Market Watch, the brief overview of the key events from the world of finance. There are no important macroeconomic reports today, and therefore trading activity may remain moderate. Also, there are no important releases planned for Tuesday that can have a strong impact on the overall market mood. And only on Thursday, investors' attention will be focused on the decision of the Bank of England on the key interest rate. On Friday, we will also keep an eye on Britain, in particular the quarterly report on changes in GDP growth rates. As you can see, the economic calendar does not contain important macroeconomic reports for the United States and the eurozone, which will help reduce the volatility of trading in their national currencies. Let's pay attention to the general mood of the market. The first half of last week was really difficult, and only by the end of it, the buyers managed to seize the initiative. But only the return of the S&P 500 quotes above the psychological mark of 5,200 will allow us to talk about a bull market. Until then, there is a risk of a more powerful wave of sell-offs, because the Fed is still not ready to lower its key interest rate, thereby increasing the likelihood of significant problems in the world's largest economy. Despite the moderate revival of buyers in the stock market, oil turned red. Quotes of the American WTI variety ended last week at $88, falling by more than $5.50, ending the worst week since the beginning of February this year. Two factors were most likely the reason for the sales. Firstly, there was no significant deterioration in the situation in the Middle East, although the risk was high. Secondly, oil reserves in the United States have increased, thereby reducing the likelihood of a shortage. The appearance of two bearish fundamental factors led to the collapse of quotations. But the activity of sellers may decrease, because the geopolitical situation remains extremely tense, while the global economy continues to grow at a fairly high pace. Concluding the review by the cryptocurrency market, it should be noted that the panic sales have been stopped. Most likely, the return of investors to the cryptocurrency market was due to the deterioration of the labor market situation in the United States. After all, unemployment turned out to be higher than forecast, which was facilitated by an unexpected decrease in the number of jobs created in the non-agricultural sector. This report increased the likelihood of a reduction in the key interest rate by the Federal Reserve, thereby returning buyers to the stock market, as well as the cryptocurrency market. The general increase in interest and risk has helped to stop the panic, but at the moment we are not talking about the next wave of growth, as it requires an additional driver. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.